Hey everyone, welcome back. It's time for another deep dive. And this one goes out to you. You know who you are. You flooded our inbox with questions about this one. Gold IRAs versus cryptocurrency.
Yeah. Seems like everyone's trying to figure out where those two worlds intersect.
Exactly. You sent over tons of articles, forum discussions, even some YouTube videos. We even got that Gold IRA vs cryptocurrency, a comparative analysis article from Gold IRA Blueprint. It's from last month, November.
Right? November 2024.
Yeah. So we're going to try to make sense of it all and hopefully help you decide if either of these options are right for you. It's kind of like, well, imagine holding a piece of history right there in your hand.
Yeah.
A gold coin, something that's been valuable for centuries.
Right. And then on the other hand, you've got this digital wallet with cryptocurrency, a piece of the future.
Okay, so let's start unpacking this. What exactly is a gold IRA? I know it has something to do with gold, but how does it fit into a retirement plan?
A gold IRA is a type of individual retirement account that allows you to hold physical gold as part of your retirement savings. You can also hold other precious metals like silver, platinum, palladium.
So it's not just gold.
Right. It can be structured as either a traditional IRA or a Roth IRA.
I've heard of Roth IRAs. You put in money you've already paid taxes on, but then you don't have to pay taxes when you withdraw it in retirement.
Right.
That's the idea. And the main appeal for a lot of investors is that a gold IRA can help diversify a portfolio and potentially protect against economic uncertainty.
It's like a safety net.
In a way, yeah. People often talk about gold being a safe haven asset.
Okay. But honestly, why is that? Just because it's shiny and always been valuable? I mean, people have always liked gold.
Well, there's more to it than that. Historically, gold has held its value incredibly well, especially during times of inflation or like geopolitical crises. It's been seen as this store of value for centuries, something that can weather economic storms. When paper currencies fluctuate or markets get shaky, gold tends to hold steady.
So it's like an anchor in a choppy sea. Yeah, that's one way to look at it.
So we've got gold. On the other side, we have cryptocurrency. And sometimes it feels so futuristic, so overwhelming. Where do you even start with understanding it?
Well, at its core, cryptocurrency is a form of digital currency. It uses blockchain technology to secure transactions between people without needing a bank.
So it's like digital cash.
Yeah, you could think of it that way. It operates independently of traditional financial systems.
And Bitcoin and Ethereum, those are like the big names everyone's always talking about.
Exactly. Those are probably the most well-known examples, but there are thousands of other cryptocurrencies out there, and they're all traded on these online platforms called cryptocurrency exchanges.
Okay, got it. Digital decentralized.
Yeah.
And it uses this thing called blockchain. I hear that word all the time, but I'm still not sure I really get what it means.
Yeah, it's easy to get lost in the technical jargon, but basically blockchain is like a digital ledger. It keeps track of all the transactions in a secure and transparent way.
So every time someone buys or sells cryptocurrency, it gets recorded on this blockchain.
Exactly. Each transaction is added to a block, which is then linked to the previous block, creating a chain of information that's really hard to tamper with. And this decentralization aspect means there's no single point of control. It's spread across a network of computers.
So it's like this public record.
Yeah.
But instead of being kept in one place, it's distributed across tons of computers.
Right.
So it's almost impossible to hack or change it.
Exactly. That's the beauty of blockchain. It brings a level of transparency and security that's pretty groundbreaking. And that's the technology underpinning cryptocurrencies like Bitcoin.
Okay, that makes more sense. But how does this actually affect someone who's investing in cryptocurrency?
Well, because those blockchain transactions are permanent and everyone can see them, it helps prevent fraud, like double spending.
Double spending. That sounds bad.
It is. Yeah. Basically, it means spending the same digital currency twice, but blockchain makes that virtually impossible.
Okay, that makes sense. So it streamlines things, makes things potentially faster and cheaper than traditional methods,
Yeah.
especially for international transfers. But one big difference that jumps out, the article made a big deal about this. Gold is something you can actually hold. Cryptocurrency is purely digital. What does that mean for someone who wants to invest?
That's a really fundamental difference. With the gold IRA, you have to think about storing that gold, maybe in a secure vault or a depository.
Yeah, I'd be a little nervous having all that gold just lying around.
Right. But with cryptocurrency, it's all about securing your digital wallets, understanding cybersecurity to protect your assets.
So it's like two different kinds of security. Physical security for gold, cybersecurity for crypto.
Exactly.
And both are pretty important. I can see how people who aren't tech savvy might feel uneasy about that.
For sure. But if you're comfortable with online banking, Managing a crypto wallet might not feel that different.
Good point.
Okay.
So we've got this physical versus digital thing going on, but they both have this limited supply aspect, right?
Yeah.
Gold is a natural resource. There's only so much of it. And Bitcoin, well, it's designed to have a cap supply too.
Right. That limited supply is a key factor for both. It plays a big role in their perceived value. And it can be really attractive to investors who are worried about inflation eroding their purchasing power.
Okay, but how is the value actually determined? It can't just be about how much exists, right?
You're right. Scarcity is only one piece of the puzzle. Ultimately, the value of anything is determined by what people are willing to pay for it, the forces of supply and demand.
So how does that play out with gold compared to cryptocurrency? They both seem to be driven by supply and demand, but is there something more to it?
With gold, you have centuries of history, real-world uses in technology industry jewelry.
Right. Gold has been valuable for a long time.
Right. It's this intrinsic value, this history of being a reliable store of value. That gives gold a certain stability. On the other hand, cryptocurrency's value is primarily driven by market speculation and its level of adoption.
So gold's value is tied to something tangible and historically stable, while cryptocurrency is more about what people believe it will be worth in the future.
That's a good way to put it. And that makes cryptocurrency much more volatile.
Volatile, so its price can go up and down really quickly.
Exactly. It can swing wildly in a single day,
Yeah.
based on things like market sentiment, regulatory news, even social media trends.
Wow, that sounds a little scary.
It can be, especially if you're not comfortable with risk.
The Gold IRA Blueprint article, it
Yeah.
talked about gold being a safe haven asset. And I remember during the 2008 financial crisis, a lot of people turned to gold. Did cryptocurrency offer that same kind of security back then?
Cryptocurrency wasn't really around in a significant way back then. Bitcoin was created in 2009, right after the financial crisis. So it doesn't have that same track record of performance during a major economic downturn.
So no one really knows how cryptocurrency would perform during something like that.
Right, it's still a bit of an unknown.
Interesting.
Yeah.
Okay, so that's a key difference. Gold has this long history as a safe haven cryptocurrency.
Yeah.
Not so much,
Yeah.
at least not yet. Okay. This is really helpful in understanding some of those core differences. But the article also brought up regulations. Gold IRAs are highly regulated, right?
Yes, very much so.
But cryptocurrency, not so much.
That's another major distinction. Gold IRAs operate within a very established regulatory framework. You've got custodians, trustees, all these layers of oversight that are meant to protect investors.
It's like having a safety net under your safety net.
Exactly. And that can be very reassuring for people who are risk averse.
Makes sense. But cryptocurrency, being decentralized, it's still kind of figuring out its place in the regulatory landscape.
Right, right. Governments worldwide are still trying to figure out how to classify and regulate it, and that uncertainty can make some investors nervous, while others see that lack of central control as a positive.
It's kind of like the Wild West of finance. Some people love the freedom, others are running for the hills.
It's a good analogy.
And then there's this whole question of historical performance. Gold has a track record that goes back thousands of years. What about cryptocurrency? How does it compare in terms of its history and potential for growth?
Well, gold has this incredibly long history of being a very stable asset. Its purchasing power has remained relatively stable over very long periods. Cryptocurrency, on the other hand, has a much shorter history, just over a decade, really.
So it's kind of a baby in the world of finance.
Comparatively speaking, yes. And while it has shown potential for explosive growth, it's also been marked by extreme volatility.
So it's more of a high-risk, high-reward kind of thing.
You could say that gold is often seen as a wing times of economic uncertainty. Cryptocurrency, on the other hand, has the potential for much faster, higher returns, but with much higher risk.
Okay, so we've got these two very different investment options, each with its own set of pros and cons. But before we move on to how someone might actually choose between them, are there any surprising similarities? Is there any common ground between these two seemingly opposite investment worlds?
There are some pretty interesting similarities, despite their differences. For example, both offer potential for growth, but in different ways, gold tends to offer slower, steadier growth, acting as a hedge against economic turmoil. Cryptocurrency, on the other hand, has the potential for much faster growth, but with significantly higher risk.
So it's like choosing between a slow-growing oak tree and a vine that might shoot up quickly, but could also just as quickly wither and die.
I like that analogy. And just like you might have both trees and vines in a diverse garden, Both gold and cryptocurrency can play a role in portfolio diversification. Having a mix of assets, stocks, bonds, real estate, and maybe some gold and cryptocurrency can help balance your portfolio against market fluctuations.
So don't put all your eggs in one basket.
Exactly. Spreading your investments across different asset classes can help reduce your overall risk. And here's another similarity. Both gold and certain cryptocurrencies, like Bitcoin, have limited supply. Remember, gold has a finite natural supply, and cryptocurrencies like Bitcoin have coded supply limits. This scarcity contributes to their perceived value.
Okay, that makes sense. But how do you actually figure out how much a piece of gold or a Bitcoin is worth? It can't just be about how much of it is out there, right?
No, you're right. Scarcity is only part of the equation. The value of any asset is ultimately determined by what people are willing to pay for it, the forces of supply and demand.
Right, supply and demand. But with gold, you have thousands of years of history as a medium of exchange and a store of value. Combined with its practical uses in industry and technology, that gives it a certain intrinsic value.
Right, exactly. Cryptocurrency. On the other hand, it's much more about what people believe it will be worth in the future.
So it's more speculative.
You could say that its value is much more influenced by market sentiment, technological advancements, its level of adoption. It's still a relatively new asset class, so its long-term value is still unfolding.
Speaking of new and unfolding, the Gold IRA Blueprint article also mentions something called non-fungible tokens, or NFTs. They're part of the cryptocurrency world, but they seem like a whole other thing. Are those the digital things like the Bored Ape Yacht Club pictures that people were paying millions of dollars for?
Yep. Those are NFTs. NFTs are unique digital assets that represent ownership of something. They're built on blockchain technology too.
Right.
But unlike Bitcoin, where one Bitcoin is essentially the same as another, each NFT is one of a kind.
So they're like digital trading cards, where the value is based on their uniqueness and how much someone is willing to pay. But I don't get it. Why would anyone pay millions for a JPEG that anyone can just right-click and save?
It's about owning the original authenticated version, like owning an original painting versus a print.
Yeah.
And there's also this community aspect, being part of a certain group, and the potential for profit if the NFT's value goes up.
So it's kind of like cryptocurrency. There's a speculative element. But with NFTs, it feels even riskier. A Bored Ape picture isn't exactly a tangible asset like gold.
You're right. NFTs are very speculative. Even more so than traditional cryptocurrencies, their value is entirely based on market perception and demand, which can change really quickly. There's no guarantee that an NFT you buy today will be worth anything tomorrow.
It's like a digital gold rush.
Yeah.
Everyone's hoping to strike it rich by finding that next viral NFT. But unlike gold NFTs, their value seems to be all about hype and what's trending online.
There's definitely a lot of hype. But it's still early days. We're just starting to figure out their potential and the risks. It's a bit like the early days of the internet. When people were trying to figure out what the World Wide Web was all about, some saw the potential. Others thought it was just a fad.
So we're in uncharted territory, and it's too early to say if NFTs will become mainstream or just fade away like other internet trends. It's a cool concept, but definitely one that needs caution and a lot of research.
Absolutely. If you're thinking of getting into NFTs, do your research and watch out for scams. It's a volatile market. You need to understand what you're buying and the risks.
Okay, so we've talked about the differences,
Yeah.
the similarities. We even went down the NFT rabbit hole for a bit. But let's get back to that main question. Gold IRA or cryptocurrency? Which is the better investment?
There's no easy answer to that. It really depends on you. It's like choosing a car. There's no best car out there. It depends on your needs, your budget, your lifestyle.
Okay, so let's play a little game here. Let's say our listener is in their late 20s, just starting to think seriously about their long-term financial planning. They're okay with taking some risks, but they also want to protect their savings. What kind of advice would you give them?
Well, I'd say a diversified approach makes sense. They're young, they have time on their side, so they can afford to put a small percentage of their portfolio into higher risk assets like cryptocurrency.
Okay, but not too much.
Right. It's about balance.
There.
They also need to balance that with more stable investments like stocks, bonds, and potentially a gold IRA.
So a little bit of spice, but not too much heat. A balanced portfolio for a balanced life.
Exactly. A gold IRA could offer a hedge against inflation and economic uncertainty, while a measured amount of cryptocurrency could give them exposure to potentially high growth.
What if our listener is a bit more adventurous, more of a risk taker, intrigued by cryptocurrency and NFTs, but also worried about making big mistakes? What would you tell them?
I'd say start small. Invest an amount you can afford to lose. Experiment with different cryptocurrencies. Learn about NFTs. See how volatile things can be firsthand. It's like test driving a car before you buy it.
And always remember, never invest more than you can afford to lose.
That's great advice for any investment, but especially in the world of crypto and NFTs.
Now, let's say our listener is in their late 50s, getting close to retirement. They've worked hard, saved their money, and now they want to protect what they've earned and generate income for retirement. They'd rather have stability and peace of mind than take big risks. What's the best strategy for someone like that?
For someone closer to retirement, a more conservative approach is usually a good idea. A gold IRA could be a good fit, providing stability and a hedge against inflation.
As we get closer to retirement, we're less likely to want to gamble with our nest egg, right? It's more about making sure we have a comfortable retirement.
Exactly. At that stage, it's about finding the right balance between growth and preservation. Working with a financial advisor who understands their needs and goals can be really valuable.
Okay, so we've got our young investor who's willing to embrace some risk, and our soon-to-be retiree who's prioritizing stability. Two different investors, two different approaches, but one thing they both have in common. They need to understand their financial situation, their goals, and how comfortable they are with risk.
That's right. Self-awareness is key. Investing isn't one size fits all. It's about finding what's right for you. Just like no two journeys are the same, no two investment portfolios should look exactly alike.
This has been such an interesting journey. We've covered the basics of gold IRAs and cryptocurrency. We even explored the world of NFTs, and we talked about different types of investors. But there's still more to cover.
Right. We still need to talk about how to choose a reputable company, open an account, buy gold or cryptocurrency, and how to manage those investments wisely.
The practical stuff, how to actually get started.
Exactly. We'll cover all that and give you some essential tips to help you make smart decisions about your financial future. Stay tuned for the final part of our deep dive.
Okay, so we're back, ready to dive into the how-to part of all this. We've talked about what gold IRAs and cryptocurrency are, why they might be good investments. But now, let's get practical. How do you actually get started? It can all seem a little intimidating. Thankfully, that Gold IRA Blueprint article had some good advice about finding a reputable company.
It did. Choosing the right company is crucial, whether you're looking at a gold IRA custodian or a cryptocurrency exchange.
Right, it's like finding a financial partner. You wouldn't just trust anyone with your hard-earned money.
Exactly. You want to find someone with experience, integrity, a solid track record. So do your due diligence.
Due diligence.
Okay.
So what does that actually involve? What should people be looking for?
Start with research. Look for companies that have a proven track record. Check online reviews. See what other investors are saying.
And what about fees? Those can really eat into your returns.
Absolutely. Look for companies that have transparent fee structures. Make sure you understand exactly what you're paying for.
And are there any specific certifications or regulatory bodies to look for? You know, kind of like those seals of approval that give you some peace of mind.
Yes. For gold IRAs, you want a custodian that is IRS approved and compliant with all the regulations. Look for memberships in reputable industry organizations, like the National Ethics Association or the Better Business Bureau.
So it's kind of like checking their credentials.
Exactly. These organizations have standards for ethical conduct and business practices, so it's a good sign if a company is a member.
Okay, that makes sense. And on the cryptocurrency side, how can you tell if an exchange is legit? It seems like new ones are popping up all the time.
It can be hard to keep up, especially because the cryptocurrency world is still evolving.
Right.
And regulations can vary from country to country. But one thing to look for is registration with the Financial Crimes Enforcement Network, or FinCEN.
FinCEN, what's that?
It's a bureau of the U.S. Treasury Department, and it's responsible for combating money laundering and financial crimes. So if an exchange is registered with FinCEN, it means they're subject to certain regulations and oversight.
Okay, so that's a good sign.
Right. And you should also make sure they follow Know Your Customer and anti-money laundering regulations. These are basic safeguards that help prevent fraud.
KYC, AML. Got it.
Right.
So those are the things to look for. But what about security? I hear all these stories about people getting hacked and losing their cryptocurrency.
Security is a big concern, especially with cryptocurrency. So you want to make sure the exchange you choose has strong security measures in place. Things like two-factor authentication, cold storage options, insurance protection.
Two-factor authentication. That's where you need a code from your phone or email to log in.
Right. Exactly. It adds an extra layer of security to your account. And cold storage means your crypto assets are stored offline, so they're less vulnerable to hacking.
So it's like keeping your crypto in a safe rather than leaving it out in the open.
Yeah, I could think of it that way. And insurance. Well, that can provide some financial protection if something does go wrong, like a security breach or theft.
Are there other ways to check an exchange's security track record?
You can read user reviews, check for independent security audits. These audits evaluate the exchange's security protocols and infrastructure, so
Hmm.
you can get a pretty good idea of how secure they are.
Okay, so it sounds like choosing a company for either a gold IRA or a cryptocurrency. It involves doing some research.
It does, but it's worth it. You want to feel confident that you're working with a reputable company.
Absolutely.
Yeah.
But let's say you've done your homework, found a company you trust. What's next? How do you actually get started with investing?
Time to open an account. The process will be a little different depending on whether you're opening a gold IRA or a cryptocurrency account.
Okay, what are the key things to keep in mind for each type of account?
For a gold IRA, you'll typically need to fill out an application, provide some identification, choose how you want to fund the account.
Funding. Can you explain that part a little more?
Sure, you can fund your gold IRA by rolling over money from an existing retirement account or with a direct contribution. Once the account is funded, you'll work with the custodian to choose the specific gold products you want to hold.
So you can actually choose what kind of gold you want.
Yes, you can choose between things like bullion coins, even gold-backed ETFs. It just depends on your investment strategy and risk tolerance.
Okay, so opening a gold IRA, it's pretty similar to opening a traditional IRA. But instead of stocks and bonds, you're choosing gold.
Exactly. And for cryptocurrency, it's usually a more streamlined process. You create an account on the exchange, verify your identity, link a payment method.
Like a bank account or a credit card.
Right. And then you're ready to start buying and selling cryptocurrencies.
Okay, sounds pretty straightforward. So let's say the accounts are open. Investments have been made. Am I done? Can I just sit back and relax, knowing my financial future is all taken care of?
Not quite. Ongoing monitoring and management are really important, both for gold IRAs and for cryptocurrency investments. You need to stay informed about market conditions, economic trends, any changes in regulations that might affect your investments.
So it's not like a set it and forget it thing, more like tending a garden.
Exactly. You need to water it, weed it, make sure it's getting enough sunshine. With a gold IRA, you might need to rebalance your holdings periodically, especially if the price of gold fluctuates a lot, and you'll want to keep an eye on storage fees and other costs.
And for cryptocurrency, what does ongoing management involve? I mean, it's a much more volatile market, so I imagine it requires a different kind of attention.
It does. The crypto market is known for its rapid price swings, so you need to be prepared to manage risk. You might want to set stop-loss orders, so your crypto is automatically sold if it drops below a certain price. That way you can limit your potential losses.
That's a good idea. And what about diversifying? Is that important with cryptocurrency too?
Yes, diversifying across multiple cryptocurrencies can help reduce your overall risk, just like with any other investment.
It's like that don't put all your eggs in one basket rule again.
Exactly. And don't be afraid to seek out resources and information. There are websites, newsletters, even social media groups dedicated to cryptocurrency investing. You can learn a lot from other investors.
So it's like joining a community where you can get
Yeah.
support and advice.
Exactly. And if you're feeling overwhelmed, you can always work with a financial advisor who specializes in cryptocurrency. They can provide personalized guidance.
Okay, so we've covered a lot of ground here. We talked about the history and fundamentals of gold and cryptocurrency. We even looked at NFTs. And we went through the practical steps of choosing a company, opening an account, managing your investments. As we wrap up here, what are your key takeaways for our listener?
I think the most important thing is to understand yourself, your financial goals, your risk tolerance, your time horizon. Once you have a good grasp of those things, you can start to figure out which investments are right for you.
So it all comes back to that self-awareness we talked about earlier.
Right. And then do your research. Get advice from trusted financial professionals. And never stop learning. The world of finance is constantly changing, so staying informed is crucial.
This has been a fascinating deep dive. I feel like we've only just scratched the surface, but hopefully we've given our listener a good foundation to start building on.
I hope so. Whether you choose gold, cryptocurrency, or a mix of both, remember that investing is about creating a secure future for yourself and for the people you care about.
Well said. Thanks for joining us. We hope you learned something new. And as always, keep those questions coming. We love hearing from you. And until next time, happy investing.